Good morning, good afternoon, and good evening, wherever you are in your beautiful country. This is a new episode of Pair Trade Finder Pro, where we are analyzing the pair Gentex LEA, which are the stocks that belongs to the companies Gentex Corporation and Lear Corporation, both in the automotive sector, and both belong to the new Slow 60 set that has been recently launched, and that is precisely why we are doing this trade of the month with these two tickers. In this trade, we are going slightly at the edge because the signal on this pair was triggered precisely because of Lear presenting results 2nd of August, where the signal was triggered. This kind offers a good opportunity for profit because the standard deviation tends to be high due to the earning release fact, but at the same time should be treated very carefully to get the most out of them once they revert back. We could say that they are slightly more risky, but still tradable if some cautious measurements are taken, and this is precisely the objective of this video. But as we always do, let's first check news and analyze the different parameters that you see in our cheat sheet. So going to the NASDAQ web, which is the one that I normally use to analyze news, what we observe is that 2nd of August there was nothing relevant around Gentex. Earning release already took place on the 2nd of July, and dividends was took place 10th of May. Sorry. So that's clear from that ticket in that respect and shouldn't affect the price. The rest of news doesn't seem to be strong enough to affect the price. There is an article 1st of August explaining why this is a good stock to trade, but that doesn't seem to be enough in order to affect the ratio price substantially. Lear ex-dividend date is 31st August, which is 30 days away from the signal entry, and that's time enough. But a different story is earning release, as already mentioned. It happened on the 2nd of August, and that was precisely the reason for the standard deviation jump that we see specifically here. Of course, we don't want to be in a trade where earning release is on site in the near future. We always ask for a minimum of 30 days. But in this occasion, results were not on site. They just have happened. So it's a slightly different situation. And to leverage the fact, but still be cautious, we do the following. First, we wait to the end of the session in order that the market is able to absorb the announcement and its immediate effects, and then place a limit order depending on your trade direction. This allows at least one full session for the price to stabilize and also give us some additional margin included in the order placed, as mentioned, a limit order. And in my case specifically, the order was filled on the 4th of August because the price was still slightly growing during August the 3rd before reverting back. Watch out to do it in a way that the price do not revert without you in the trade. So the limits should be tight enough, and don't go with them too big because we want to distort the nature of pair trading and begin playing a price action strategy because we are not in that chapter, and mixing strategy is never a good idea. But in addition to that, and analyzing a trade that is at its edge, we want to better understand if the earning release information does include anything that could be considered structural to Lear stock price and could affect the ratio reverting back soon, as that's our anchor point to take this trade. So if I go to Yahoo Finance and I read SEC analysis, you can go through all this page, but the final conclusion is that there's nothing important enough in the long term that has been communicated, and the price jump was due to better than expected results. Even more, if I go to the guidance paragraph, which is one of the topics that normally tend to deviate a lot the price when earnings are communicated, what I can observe is that for the rest of 2022, the communication is very similar or even slightly better than the previous report. So we can now be confident that there's no elephant in the room and continue with the analysis. So based on that, we go to our cheat sheet and we color news with the green, but of course the earning dates we mark it with the yellow because we are in a slightly sensible situation and we want to reflect that in our decision making process. Of course, as already mentioned, dividend dates are both okay for both tickers. Per momentum is apparently looking good. As last 12 months, approximately, the ratio chart has been pretty flat, as you see here. And each leg do not present a trending price in a one-day time frame. Let me show you that here. This is Gentex. 2nd of August is here. So the signal was triggered here. And you can observe on your left that the price has been going sideways. This is precisely the scenarios we want to be in. For Lear, situation is similar, with the exception that previous day to the signal, the price was growing, but still if you observe your left side, what you see is a sideways movement. And as we are gonna go short in Lear, this is a nice place to get into the trade. So with that, per momentum is okay, and we mark it with the green. Ratio chart and percentage from mean is the next parameters we want to analyze. So we go back again to our charts and we see that the signal when the trade was pop up was even below what you can draw here as a support level. And in the ratio chart, what you see is that it was somehow growing up and all of a sudden it went down. So that is another thing that my conclusion is that reversion to mean is very possible because this is a very abrupt movement. And it's not only because the earning release, it was diverting for the 3 to 4 previous days. So I like this chart. This is a chart that it's somehow giving me the feeling that from this point, reverting back is very possible. So with that, we mark these two boxes here with the green. Next one is RSI. RSI, when the signal was triggered, let me show you, was at 15. And although there is no divergence with the ratio price, 15 is extreme enough in order to consider that this is a good RSI for our trade. So with that, we mark RSI chart also with a green. Correlation and co-integration. I go to my backtest and I see that correlation is 60 to 60, so almost 63, which is fine, but co-integration is weak. We see that when the signal was triggered, co-integration was slightly higher. It was at 0.66, but still weak. We always ask as a minimum of 0.88. So we mark the correlation with the green, but co-integration is a clear red. We want to reflect that because this is, as you know, one of the fundamental parameters in all our analysis. So at this point, you may take the decision to, well, this is not good enough for me, and co-integration is such an important thing that I will not go ahead with the trade. And it is a very good option. But let me continue because one of the lessons I want to extract from this video is the fact that you should take into consideration the whole picture. Even if co-integration is not that good, there is some other things we are going to see that altogether convince me to take the trade. So let's go ahead. We mark co-integration with the red, but we continue with volatility. It was 1.82%, well below our 2.5% limit. So we will mark this with the green. This is a big plus because prevent our trade from big unexpected movements, and that is something that gives us some confidence. Next parameter is CAGR and drawdown. So back again to our backtest. CAGR is almost 14, well above our drawdown, which is 9.7. So this is a nice ratio between CAGR and drawdown. But let's go further with the detail with the valuable information we can extract from the software. And if you observe, you can see here that the average profit per trade is almost 300. We are playing here a 5,000 per leg trade, so this is a pretty good number for this leg size. Even more important is that there is 8 trades in the last 3 years for this pair. That's a good number of trades, and all of them were winners. So 100% winning percentage for all those trades. And finally, average days in trade parameter is around 16, and taking into consideration the nature of the slow 60 set, this is a good number. This is it's not a fast 50 number, but it's around 12 to 14, but for a slow 60, it's quite good. So that's also a green in those final parameters. So final conclusion of our analysis is that the trade is a go for me. Probably it is not for you, but it is important to understand that there is some instance where you have to take into consideration the whole picture, even if the most important parameter, which is co-integration, is affected by a red. I still think this is a tradable situation, and the final result for it was that in just in 13 days, there was $490 with a 5,000 legs, which is an amazing 24.5% on margin if a 5-to-1 leverage is used. Conclusion is that these kind of situations are very profitable if they are traded with cautious, as we already mentioned, giving some space for the market when the earning release was given in order to absorb the movement and get the entries done properly with limit orders. That was the intention of the video, let you know that limit orders is something important in order to be used to get in the trade with the higher optimization possible. And with that, the only remaining on my side is to wish you a very good trades.